So now I'm going to show you where I like to place a stop loss. So support and resistance areas is the first one. Come down, tested, come down, tested. So if it's been tested more than twice, you know that's a good strong support area. So in this area, I put my stop loss. It's protected by the support area as well. The next place I'd like to place as well is above. So it's come up, tested again there in this area. So I put my stop loss above the resistance area. I would mark out the support and resistance in the higher time frames as well, like the 2 hour or the 1 hour. So let's go down to the 15-minute time frame. So you go to treble bottoms, come down, test it again. Let's see when to do this candle as well. There's a bullish engulfing. What you do for your stop loss, below support. And how you would know how many points to risk on this trade is with an ATR, average to range. So in this area, it's giving you 30 points. What most traders do is if it's giving you 30, they double the ATR, so 60. I don't like to do that. I like to do a few points more. So if it's giving you 30, I like to go about 32. So that's where my stop loss would be. So I twist that to get 30. That's a 1-to-1 trade. If you want to do 1-to-2, you risk 30 points to get 60 points. And what time frames I like to trade in is the 2-minute or the 3-minute. So let's go down to 2-minute for a minute to have a look. And sometimes I do trade in the 5 minutes as well. So if I'm trading in the 5 minutes, the ATR is giving me 25, no, 20. So put 5 points more. So you risk 25 to get 25 for 1-to-1. So that's where my stop loss would be. So you risk 25 points to get 25. Or if you want to do 1-to-2, I do like to do a 1-to-2 in these choppy markets, mind. But some people do because you only got to win 50% of the time. So if you risk 25 points to get a 1-to-2, you need to aim for 50 points. In this area would have been a winning trade. So that's the first way. Let me show you a downtrend as well. So in this area, It's giving you 6. I just go for 10. So you risk 10. So your stop loss would be in this area. So for 1-to-1, you risk 10 to get 10. Or for 1-to-2, you risk 10 to get 20. And the way you would put your ATR as well is whatever the ATR is giving you. So it's giving you 6 in this area, as you can see. Let me mark this out for a minute. I use this. Yeah. So in this area, it's giving you 6. So for 1.2, need to, what I'm going to do is risk 10 points though on this trade. So you risk 10 to get 20. So that'll be 1-to-2. It's the reward. And the next way I like to know where to put stop losses as well is with EMAs. So the 10 and the 20. So it's going up, come back, we tested. You put your stop loss underneath this there as well, the 20. If it's come back up, come down, we tested. You put your stop loss under this. It's broke back through. Another way as well, which you can do trading stops with, which I like, is if you use the parabolic saw. What I like with the parabolic saw, I like when it's just underneath as well, like this. No, when it's far from the candle, like to be right underneath. So let's say you enter this trade, just come down, tested support. So what you could do is every time it moves up, come down, put underneath the last parabolic saw. So if it's come back down, move up to the next one. If it's carrying on going up, move up to the next one. Carry up, move to the next one. And another way you can do it as well is with an ATR band, which I will show you on TradingView. So this is an ATR band. Let's see you entered in this area. This is stop loss underneath this band. And trade it up as well. And the downtrend the same. Put it above the ATR band. I know some brokers got it like plus 500. I don't think Trading 212 got it. YG Index haven't got it either. That's another way you can do it as well.